Helen's asked me today to share a bit more information on some research that we did at Mastercard last year called the Global State of Pay. This is a wider bit of research on payments we do every couple of years, but this time we added in some open banking specific content. And the other thing that was new for us, historically it's always been UK-centric research, but this time we expanded the coverage to 14 markets around the world. 70% of people around the world said they'd be interested. What I found particularly interesting about this result, though, was the big split between what I might categorize as developed markets and developing markets, where there's a strong enthusiasm in those developing markets, perhaps a bit more balanced view in the old world, let's call it. 84% of customers overall were interested. In some markets it was high 90s%. Even the UK, which had showed itself to be a bit more skeptical, 2/3 of the sample said they wanted that sort of service. So I think an incredibly positive response. The other interesting thing was, though, that there wasn't quite the same sort of pattern, if you like, between kind of clear-cut developing world interested in this, developed world less so. It was much more mixed than that. Quite a strong divergence between developed world, which was more cautious, and developing world markets, which seemed again incredibly enthusiastic about the whole thing. So kind of quite similar results compared to that first question we asked. Risk to their personal finances in case of a data breach, or the overall kind of risks of sharing data compared to the benefits they perceive. And things like liability in case of things going wrong. Only focused on the people who said that they were unwilling or unlikely to use an open banking service because if they had to share data to access it. So I think one of the takeaways for that is that it's really important for service providers who are seeking to get customers to engage in these services to provide real confidence for those users in how their data is going to be used, that their money is protected, that if something does go wrong, that they'll be looked after, and that only relevant data is going to be accessed. I think if one does those sorts of things, then I think the sorts of objections that we saw can be overcome. But a lot of this actually in the end comes down to trust between a customer and the businesses that are seeking to engage with them. Banks are the most trusted. We asked people about banks, about payment companies, about third parties. We didn't define too precisely what third party or payment company meant. We did give people a few relevant local examples for their country, but very strongly it came out wherever you look, banks are the most trusted of these entities, particularly for the third party community. We're going to have to work hard to demonstrate to customers, to get customers to engage in those sorts of services. How transparent are they? Are they investing in data and privacy? Are they seen as behaving responsibly? And those sorts of things were kind of much more important than the service itself, or whether that business, for example, recognises loyalty in their customer. There's a clear call to action here for businesses in terms of how they present themselves to customers. There is a level of resistance that has to be overcome. Trust has to be earned. And I think, what this research says is that, customers are willing to engage in these sorts of services, but they need confidence in who they're doing business with. And so how one presents oneself to customers in attributes like transparency are going to be really important.